Everyone, hello everyone. My name is Don Franklin, a financial analyst. In this my video, I'm going to talk about the basics of forex trading. Remember, if you are new to my YouTube channel, make sure you click on the subscribe button, like, comment, and share. Thank you. What is forex? Forex trading is the simultaneous buying of one currency and selling of another. The foreign exchange market can also be referred to as forex in capital letter, or forex, or retail forex, or FX, or spot FX, or just sports. It is the largest financial market in the world with a volume of 7 trillion a day. Is bigger than the $25 billion a day volume that the New York Stock Exchange trades. Now, this place is trying to explain to us that forex is just the simultaneous buying of one currency and selling of another. You can represent forex with forex in capital letter, or forex, or retail forex, or FX, or spot FX, or just sports. Now, if you compare it with the 25 billion a day volume that the New York Stock Exchange trades every day, you will discover that forex is bigger than the New York Stock Exchange market because it trades over $7 trillion a day. Okay, so in our next slide, let's see what is being traded in the forex market. Now, the things that are traded in the FX market is money, crude oil, gold, crypto, and indices. Currencies are traded through a broker or dealer and are traded in pairs, for example, the British pounds and the Japanese yen. Forex trading is not a physical activity, and this kind of trading can be confusing. Now, we are trying to know what is being traded in the forex market. Now, the simple answer is money, crude oil, gold, crypto, and indices. Now, currencies are traded through a broker or a dealer. A broker or a dealer is simply a platform that gives you access to, to enter or to trade in the forex market. Now, the next paragraph says, think of buying a currency as buying a share in a particular country. When you buy, say, Japanese yen, you are in effect buying a share in the Japanese economy, as the price of the currency is a direct reflection of what the market thinks about the current and future health of the Japanese economy. Okay, in this second paragraph, it means that whenever you enter a forex market, for example, you want to buy a share of Japanese yen. If 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 the currency is good, that means the Japanese country is also good. Now, invariably, the price of the currency is direct reflection of what the market thinks about the current and the future health of the Japanese economy. All right, now, unlike other financial markets like the New York Stock Exchange, the forex spot market has neither a physical location nor a central exchange. Now, the forex market is considered an over-the-counter OTC, or interbank market, due to the fact that the entire market is run electronically within a network of banks continuously over a 24-hour period. Now, what this whole place is trying to explain is that forex doesn't have a physical location nor a central exchange. It is run fully electronically within a network of banks continuously over a 24-hour period. Now, in the next paragraph, due to how big, how enormous the forex market is, it is intended to be used in the late 90s only with the big firms. The initial requirement was that you could trade only if you had about 10 to 50 million USD to start with. Forex was originally intended to be used by bankers and large institutions like Coca-Cola, Samsung, and Apple, and not by us individuals. However, because of the rise of the internet, that is because of how the internet is now popular in the society, online forex trading firms are now able to offer trading accounts to retail traders like us. Okay, in our next slide, we will see forex symbols and how they are being represented. Now, forex symbols are always three letters, where the first two letters identify the name of the country and the third letter identifies the name of that country's economy. Now, in our next slide shows what I just explained in the previous slide. Now, if you watch your screen, you will agree with me that the first country here, which is the US, that is the United States. Now, the symbol here identifies that the first two letters is the country's name, which is United States, and the last letter is the country's is the currency name, which is dollar. Then the nickname is buck. Now the same thing is also applicable to euro and JPY, which is Japan and Great Britain, Switzerland, Canada, Australia, New Zealand. Okay, so we are going to look into when currencies can be traded. Now, the spot FX market is a unique market with the world market. It's like a super Walmart where the market is open 24 hours a day at any time somewhere around the world. A financial center is open for business and banks and other institutions exchange currencies every hour of the day and night with generally only minor gaps on the weekend. Now, what this whole place is trying to explain is that the spot FX market, popularly known as Forex, is open for business, for exchange, is open for business for exchange for over 24 hours. Now, except a minor gaps on the weekend, which is Saturday and Sunday, the market is not serious or is being shut down within the weekend. Okay, now we need to know the time and trading zone, which is very, very important. Now we have Tokyo when Tokyo opens in our Nigerian time. Now Tokyo opens in our Nigerian time. Look at when Tokyo opens in our Nigerian time by 12 o'clock a.m., that is in the midnight, and Tokyo closes in our Nigerian time by 9 o'clock a.m. Now London opens by 8 o'clock a.m. Nigerian time and closes by 5 o'clock p.m. our Nigerian time. Now the New York opens by 1 p.m. our Nigerian time and closes by 10 p.m. our Nigerian time. Now, our next slide, we will know the benefits, the advantage why people trade forex. Now, number one advantage is no commission. Now, There is no clearing fees, no exchange fees, no government fees, no brokerage fees. Brokers are compensated by their services through something called the bid-ask spread. Now, the number two advantage is no middlemen. Spot currency trading eliminates the middlemen and allows you to trade directly with the market responsible for the pricing on a particular currency pair. Now, the third one is no fixed lot size. As a trader, you can also determine your own lot size. When lot size is applied, the way you gain is also the way you lose, and vice versa. We throw more light, I will throw more light on this in our next video on technical analysis. Now, the fourth advantage of trading the FX market is a 24-hour market. There is no waiting for the opening bell. From Sunday evening to Friday afternoon, the forex market never sleeps. This is awesome for those who want to trade on a part-time basis because you can choose when you want to trade, morning, noon, or night. Now, the last one is no one can corner the market. The foreign exchange market is so huge and has so many participants that no single entity, not even a central bank, can control the market price for an extended period of time. Okay, the only thing you need to get started is an electronic device with a good internet connection, then an account, then you open an account with Morgan Market Forex Broker. Thank you so much. Now, for the benefit of those that are new to my Facebook page, you can like, comment, and share. See you in my next video. Thank you.